traders, it's Whelms again. Welcome to my bootcamp training for Saturday. I'm gonna break down this trade that I'm in right here on Bitcoin. It's a BTC USD. Now, before I get into it, let me invite you to become a subscriber to the channel, where I actually once a week share with you techniques, strategies, patterns. I explain how I trade. That way you guys can look over my shoulder and maybe copy or get some idea on how to mark up your charts, what to look for in the market, what's important. But one of the most important things about trading is not so much the how to, it's the why. Why you want to get involved in the market, why you want to trade, why you want to make this money. Without a strong enough why, everything else does not apply. Because you can learn the techniques, you can learn the strategies, you could learn how to make profit, but what are you going to do with that profit? Okay, so that's the most important thing with regards to getting into the market, with regards to trading. You must write down in your trading journal, in your notebook, why are you pursuing this career? Because it is a career. Why are you going to spend countless hours studying? Why are you going to practice? Why are you going to back test? And why are you going to create a trading strategy for yourself to follow? Because once you create that trading strategy and you follow it to the T and you don't break your rules, although you may break your rules every now and again, but it's okay. All you got to do is, take a step back, reevaluate, and try not to make the same mistake twice. Because the market actually repeats itself every single day. So as you can see, I'm in the trade right now. And in this trade, I'm just going to break down what I saw, why I got in, and why I'm in profit. It was a lot more than this, but it's actually retracing back to the retracement levels. But this was pretty much a breakdown that I did from the hourly. So I'm going to break it down do a top-down analysis, because you have to understand the higher time frames gives you direction, and the lower time frames you want to learn, you want to execute, right? You want to place your trades in a lower time frame. You want to make sure that you follow the trend, of course, and you place a buy or a sell order depending on the trend that you're in. Right now, I believe the trend is bullish, and I'm going to break it down, even though you see that as retracing. So let me break it down from the top down, and then hopefully you understand what my approach is, and you can take notes on. If you got questions, you can always put it down in the comment section and say, hey, why did you do this, why did you do that? And if you guys want some help with regards to truly understanding how to chart up your charts, you can always reach out to me. I actually do free Forex trading to those that join the Academy, which are Cash Acts, and somewhere on my YouTube channel there will be a link to subscribe to the Academy. And once you're a member of the Academy, I take you underneath my wing and I help you set up everything, your demo account, your live account. I show you what platforms to trade with. I encourage you to, of course, to get TradingView. This is the trading platform, or the charting platform that I use. The link will be on my website at metrofxtraders.com. So you can always subscribe to the trading or the charting platform, TradingView. It's absolutely no cost to become a member, but you'll be facing a lot of ads. So you want to upgrade as soon as you can. That way you get access to the entire charting platform with no ads. So yeah, let me break this down so that way you guys could see exactly what I saw. Even though I'm already in the trade, I'm expecting it to go higher. Actually, I'm holding on to this trade for a duration of time. But let's take a look at the daily time frame. So in the daily time frame, what you want to do, and what I did, was mark up the last candle, the last daily candle. Okay, and you want to mark it up. All right, you want to take the high and then the low of the last daily candle, which is a bearish candle, right? So you mark the high and you mark the low and you put it in the box like I did right here. Okay, so you can box it up like this. You can stretch it out to Sunday if you want, or Monday. It's up to you, but I chose Sunday. I don't anticipate being in a trade that long. And excuse me. So my goal is to close somewhere up here, because whenever you have a daily candle, okay, and you're looking at the overall trend, and let's take a look at the trend in itself, you notice that there's higher highs being developed. See, this candle's higher than the previous candle over here, and then this candle's higher than this candle right here. And let me just get my arrow to show you. So this high is higher than this high, and then this high is higher than this high. So we have a bullish momentum happening, okay, and then we have this huge retracement right here, okay, which is 1, 2, 3 candles. But what usually when you have a retracement like this, and you have a candle, a daily candle that's bearish right here, which is a down candle, typically it came down to a retracement level. We're going to mark that up right now and show you what I'm talking about. Because the sweet spot in retracements, when you use a Fibonacci tool, let me just open this up here and show you that you could take the low of the Fibonacci tool, which is over here, Fibonacci retracement. You take the most recent low and you stretch it out to the most recent high, right? Okay, that's the Fibonacci levels. Now it came all the way down, so you might want to stretch it out a little bit more, so that way you'll notice, like right here. Okay, here it is. The low, if you take the most lowest candle here in its wick, and you stretch it up to the high where you're at right now, you'll notice that the Fibonacci level, I usually wait for it to hit like 61.8, so that's basically underneath this candle right here. So you roughly get 61.8 where it hits 61.8, okay, and bounces off 61.8. So that's typically the sweet spot whenever you're trading Fibonacci levels. So that's on the daily, right? So now that you marked up your last daily candle, what you want to look for is go down to the 1 hour now. So whenever the daily candle's on the bottom, typically it bounces back up to head towards the top. So what I'm looking for when I go down to the hourly time frame is a couple of things. Let me just open this up for you guys. Okay, so I put an order in. Typically I entered in the 1 minute. I'll show you that in a minute. So excuse me. And what I'm looking for right here, looking left, I noticed that, you know, there's a lot of momentum here, right? Bullish momentum, and then a huge retracement. And I'm looking for fair value gaps, okay? Gaps in the market. I'll show you what gap I was actually, I marked up to show you exactly where I entered. But now that I know that the market's on the bottom of the daily candle, I'm anticipating a bounce off the bottom to head towards the top. Okay, so if the market was on top, you want to head aim for the bottom, but the market's on the bottom, you aim for the top. If the market was in the middle of this range, of this daily range, okay, you do nothing. You just wait for it to, if it's at the top again, aim for the lower end of the candle. If it's on the bottom, you aim for the higher range of the candle. Okay, that's what I'm looking for right here. So I'm just waiting for the market to bounce off the lows here. As you can see, there's a lot of wicking happening, meaning a lot of the buyers are pushing the market higher because the sellers are being exhausted, right? The sellers are the black candles, which is the bearish candles, and the white candles are bullish candles, which are the buyers. So whenever you see candles that are long wicks on the bottom, buyers are stepping in. Okay, so that's what I'm anticipating. So I'm dropping down now to the 1 minute candle to look for an entry. Okay, I'm looking for an entry. And what did I find on the 1 minute candle when I dropped down to the 1 minute candle? 1 minute time frame. I found a head and shoulders, which is a retracement, which is a reversal setup. So whenever you see a head and shoulders, and I'll mark it up for you so that way you guys can mark it up as well. So you have a tool here that's called the head and shoulders, and it starts right here. So you do this. It's the left shoulder, and then you have your neck, and then you have your right shoulder right here. Okay, and that's your head and shoulders. Okay, inverted head and shoulders was developed right here, and then you have a trend line. I put a trend line, which is this red line right here, because whenever you have a head and shoulders, it tends to trend higher, right? Because it's inverted. So that's what I'm anticipating the market to continue to go higher, even after this retracement down here. Okay, because if you look left, you'll notice that the market structure shift. So how do you identify a market structure shift? Well, you look at the candles on the left here, right? So the market was exhausted. The market was exhausted down here, and you see a lot of the buyers are stepping in and the sellers are being exhausted. So what I look for in a market structure shift is whether or not one of these white candles will be, higher than the previous black candles on the left. And lo and behold, I saw this bullish candle right here, and I stretched it out all the way over here. If you stretch it out, you'll notice that this bullish candle is higher than the last couple of black candles here. So that shows you a market structure shift, right? Although it is retracing, right? But what it's doing is it's coming back to hit a fair value gap. And where was the fair value gap? Let me stretch this out. Again, the fair value gap is 3 candles, 1, 2, 3, right? But there's a gap between this candle and this candle, which is, if you stretch it out to the wick of that black candle, there's that gap. So what the market has to do eventually, right, within time, it needs to come back and fill that gap. Okay, and it did right there. But the great thing about when it did fill the gap, when it filled the gap right here by going right into the gap, it didn't close below the gap, which gives me an indication that the market wants to continue to go back higher. Okay, because had it closed below this gap, then all of a sudden it's no longer bullish. It's gonna now continue its journey going bearish. Okay, so it didn't close below it, so that's a good thing. And you'll understand that in time, because again, the buyers are pushing it up because of the long wicks. So whenever you see long wicks on the bottom and it just touches the gap, okay, look for bullish momentum. All right, and then I notice this particular candle here, and you'll see it more than once. In my previous videos, I talk about this doji candle. It's almost like a doji, which is an indecisive candle. Right there, I put a box around that doji candle, and I wait for the candle to build itself up above that candle, which it did right here. So you had bullish candle here, which is bigger than that candle, and there's your momentum going up. But then you'll notice that same doji candle is right here as well. So just like a quick confirmation that the bullish momentum is there, because the very next candle is bigger than the doji candle. Okay, so this is more like a doji candle, but it also mimics this candle here, where small body, long wick. This is no body, long wick. So this is more like a doji candle right there. But I anticipated it here, and I anticipated it there. Where I entered was right over here, as you can see this line right there. Okay, all right, and I'm heading. I set a target for the high. All right, so if I go back to my daily time frame, I set a target for the high of that candle. So let's make it bigger, and we'll do a quick ratio for you. And this is pretty much going to be like a swing trade. This is not like a scalping trade at all. I'm going to hold on to it until it hits the target. But let's see, Where is, it's this one right here. Long position, I entered that blue line. Okay, my stop loss has been set below. Okay. This is where my stop loss is. So I'm risking about $2,848.80 to potentially earn $29,859.20. It's a ratio of 1 to 11. Okay, so, you know, set and forget it, right? I am not gonna touch this trade until it hits the target. I mean, I'll monitor it, I'll review it, and then when it goes up above a certain level, I'll probably like move my stop loss to break even, but I'm not doing that yet. So we're gonna leave it right there. 2,900 is fine. And then we're aiming for the high of the day, which was yesterday's high. So that's what we're aiming for. I mean, I could have took it all the way to the wick, but I want to aim it to the body and just take a look. Monitors this trade throughout the day. So today's Saturday, so by midnight I'll take a look to see where the market is at that point, and I'll report back to you guys with another video, let you know whether or not it was a winning trade or a losing trade. But rule number one, when you set your take profit and you set your stop loss, don't move it. Okay, because a lot of traders, the reason why they fail is because they move their stop loss, because they're like, oh, I feel like, you know, if it doesn't hit my stop loss, it'll eventually get to my take profit. That's not, no, that does not happen. You end up losing more money if you move your stop loss, because the market has no respect of persons. It doesn't know who you are. All it knows is numbers. And you know, if you do a good analysis of the market through technical analysis, you just have to, you know, based on probabilities, set your take profit and your stop loss, and just set it and forget it. Walk away from the market. Monitor it throughout the day. Okay, so this is a demo account on TradingView, and the demo account pretty much, I'm up $197. I opened the account with $100,000 of paper money. I did lose a lot since my last video with you guys, but that's okay. Again, this is a great way to practice, because when you lose, you can always go back and reevaluate and see where you went wrong. And now I'm just trying to get it back up to those levels. That way it'll be over $100,000. So I'll keep you guys posted. Like I said, the worst case scenario, I'll lose like $2,900, which is not a big loss. I'm okay with that. But the best case scenario, if it does hit the target, I'll be over $100,000 again. So I'll keep you posted on that. But I wanted to share that with you guys today, because my strategy is really simple. Okay, I start with the daily. I box up the daily, previous day's candle. I go down to the hourly. Okay, I take a look to see where the candles are based on the chart. If it's at the lower spectrum of the candle, okay, I'm looking for buys. Okay, reversals. If it's at the higher spectrum of the candle, I'm looking for sells. Okay, so this is where I'm at right here. I'm just looking for the market to bounce off the lows, okay, and then eventually head towards the high, okay, of that candle. And then I drop down to either the 5 minute or the 1 minute. Usually the 1 minute, I'm looking for entry. I'm looking for a place to get in the trade. Okay. And I got in the trade based on, number one, I saw a inverted head and shoulders, and I also saw a fair value gap. As you can see, is right back at that fair value gap, touching it again. But again, if it doesn't break the fair value gap, it's still a good bullish trade. If it closes below the fair value gap, I may reevaluate the trade as well, or I may, well, here we go. Let me show you something. There's another fair value gap right here, this candle, 1, 2, 3. Oh, it's already been mitigated, meaning it's already been filled. If you do this, that wick and that wick, which is that candle right there, this candle, the wick sit in touch with this bullish candle right here, but the candle after it did come into that fair value gap, so it's been mitigated, meaning it's been filled, and then it continued to climb higher. So I could pretty much stretch this out, all right, and extend it to the right, and then take a closer look to see if the market wants to come back and touch that fair value gap, because if it does, then you're looking at a double bottom where the wicks will come back, and you could put a line at the end of this wick. Actually, is it that one? Let me see. Yeah, because this is the wick that filled the gap, right? So that red line, you put it underneath that candle, and if the market wants to come back, yeah, it looks like it does. Market wants to come back, I'm anticipating that it hits this red line. Okay, remember it's got to close below that fair value gap. It may still bounce back up, but it may come down and touch this red line for a double bottom. Okay, and continuous climb higher. But again, the buyers, you see this long wick, the buyers are stepping in. Okay, again, what do we have? We have this particular candle here, which is mimics a doji candle. Okay, I always mark those up, and it's really easy to find. So you mark that up, you put it in a box, and what you're looking for with this candle is anything that's above the candle is good, is bullish. Okay, so you see this white candle is a bearish engulfing candle, which means it's bigger than these candles on the left. Okay, and again, it didn't close below that fair value gap. Okay, so there's two fair value gaps, but this one is right here. It's the one I was monitoring, and it did dip, and my count was negative. But look at this, it's actually getting higher, and it's heading higher, and hopefully it'll break these highs over here. Because once it breaks these highs, like right here, once it breaks this high, I'll make it red, I'll make it stand out. Once it breaks this high, then it's all smooth sailing from there. Okay, then it will definitely let me know that there was a true market structure shift. As you can see, once it breaks these highs, it's pretty much a win-win from there, and hopefully we can hit our target. So that is what I was looking for. Okay, and if you were to pull out the Fibonacci tool again, and just to take a look to see what's going on, the Fib tool again is on the left side. You take your Fibonacci retracement tool, you aim the bottom to the top, and you stretch it out. As you can see, the market's bouncing off the sweet spot of 61.8%. Okay, this is a great tool. Learn Fibonacci retracement, as it'll help you in your journey to becoming a profitable and successful trader. There's a lot of YouTube videos explaining what Fibonacci retracement is. Okay, because once you understand Fibonacci retracement, and you know the market has to bounce off these levels, you can take buy orders and set your stop loss below, because my stop loss is back down here. And as you can see, the market's bounced off to 61.8, and now I'm in profit of $229, $238. So hopefully it'll break these highs here and continue its journey. I'm really wanting it to break these highs up here. Okay, and then I'm home free. Okay, because there'll be no more reason to come back down to retouch these areas, even though we touched it twice. So you pretty much got a double bottom because it touched it twice. So usually with a double bottom, it hits higher, but the market will do what the market wants to do. So we just got to monitor it and manage the the account based on risk management. Okay, and the psychology of the market is between your ears. Okay, don't get emotional. Don't revenge trade. Don't place multiple trades. Try to aim for at least 2 to 3 trades a day. Based on your trading strategy, you must have at least 2 to 3 trades a day. If you lose a trade, I'll be sharing with you guys a Kaizen methodology in the next upcoming videos, where if you get a loss, if you have a losing trade, you step away from the chart, take a sip of water, drink a sip of water. Okay, that way you don't jump back into the market thinking, oh, I need to make that money back, or I need to revenge trade. You want to avoid revenge trading. Okay, and you want to avoid clicking that buy button or that sell button when you lose the trade, because once you do that, you're not in control. You're letting your emotions control. I mean, nobody wants to end the day with a loss, but sometimes you just gotta take a step back, drink a sip of water, and come back in the market when you have done that, and reevaluate. Okay, reevaluate. Maybe something went wrong. Maybe you didn't choose the right trend. Maybe you thought you were in an uptrend, but you were actually in a downtrend. That's why you have to analyze the market from the top down based on the higher time frames. And once you see a retracement and it goes further down than anticipated, like in this particular trade, if the market, right, it's retracing, right, it's doing one of these numbers, making lower lows, right, lower highs, lower lows, lower highs, lower lows. And if it continues to do this and breaks 78.6 or even 100, then yeah, it's a market structure shift, and it's trending lower. All right, and that's a done deal. Hits your stop loss, and all of a sudden, you have a losing trade. But as you can see, the market came back for a third touch. Okay, a third touch of the 61.8 area, which is 1, 2, 3. Okay, this area has been touched more than once, yet and bouncing off that area, which is a good thing. Okay, so we're just going to continue to watch now. A triple bottom again. Usually when you have a triple bottom, it bounces off and goes higher. So we'll continue to monitor that, but I'll keep you guys posted on that. But hopefully you guys got value out of this video based on what I just shared with you. You start with the daily, you go down to the hourly. With the daily, you mark up the last candle, put it in the box. Okay, and again, if all the candles based on when you drop down to the hourly, if all the candles are on the bottom of the candle range, you want to look for buys with confluences, with reading the candles, with seeing if you see like a bullish engulfing candle, seeing if you see a doji candle. Like I put a couple of doji candles here that I boxed up, and I was just waiting for those doji candles for higher candles to be above the doji candles. Okay, so like right here. All right, so yeah, so I'm just gonna wait to see what's going on, see if I can hit my target. If I do, I'll keep you guys posted. If I don't, again, you have to accept loss. Loss happens, and when it happens, you just got to reevaluate, take a step back and say, okay, what did I miss? I thought it was an uptrend, but it actually changed into a downtrend. Okay, how do I recalibrate? What should I be looking for next time? Okay, where should I set my stop loss? Okay, because stop loss helps you protect your principal. You need a stop loss. Don't do like I did the other day. I got into a trade and I forgot that I was in a gold trade, and the market opened exactly at 8:30, and exactly when the market opened at 8:30, and I was heading, trading down, like placing sell trades, because it was in a trend of downward momentum. But as soon as the market opened up, and I knew this, and I'm going to definitely highlight it on my notes, that whenever the market is in a certain trend and it opens at the hour that it's supposed to open, which was 8:30, Eastern Standard Time, it retraces and stops out everybody that's looking to win that trade going down, right, on a downtrend, because that's where the market makers make all their money. They'll spike the market all the way up, right? They may even change the structure of the trend to a market structure shift. But what it did was it knocked everybody out of the trade, and then it went back down, which is kind of weird, because those stop losses is where the market makers make their money. So you need to know where to place your stop losses so you really don't get affected and get stopped out, right? But it went up so high that it was too late. It was like, I just looked at it and I was like, oh my goodness. And I pretty much lost that account. It was a challenge account. And it went as high as $2,500 in losses. And silly me, didn't set a stop loss. I was about to, but it happened so quickly that when 8:29 came and then 8:30, boom, that's when it took like 30 seconds for it to climb all the way up to like 2,500. And also I looked down and it's like, oh, got an email, try again, challenge failed. But I'm happy to report that I'm actually in 3 challenges right now, 2 of which I passed. And let me show you some proof here. All right, hold on. Okay, so they sent me a certificate, and this is to certify that Wilms M has proven ability to manage risk successfully through our evaluation. They have shown the discipline. He has shown discipline required to become an E8 trader for E8 markets and can start earning based on their performance in the simulated markets. So there you go. This is one of the ones trading challenges I passed, which was March 3rd, the year 2026. I'm really proud of that. And the other one, I'll just bring that over, is this one. And I, of course, made a screenshot of it to remind me that, hey, I know what I'm doing. It's just that I got to be consistent and disciplined, right? And this one, March 6th, I went ahead and passed another evaluation, and these are both $25,000 evaluations. Now I'm able to trade a live account with E8 trader, and the profit split is going to be 80-20. So once I grow the account to a certain amount, I can request a payout, and the request will be 80% I make, 20% the actual company makes. So it's a partnership. It's a win-win. Now this is where the real strategy comes into play. What I mean by that is your trading strategy, you should have 2 trading strategies. One that's a little bit aggressive to help you pass the challenge, right? Taking a little bit higher risk, managing that risk. But once you pass the challenge, you drop down and take less risk. That way you can maintain and grow that account over time. Okay, you don't have to rush now, right? You take your time and you grow the account over time. I'm going to talk about week by week by week by week, to the point where you have enough funds, you grew the account to a certain level to request a nice payout. Of course, there's drawdown levels. You want to make sure you manage the account where you don't lose the account by hitting the drawdown. Drawdown meaning you can't lose no more than said amount. Once you lose that amount, they close out the live account, and then you got to start all over. So now my trading strategy is 1%. Okay, 1 to 2%. That's it. My risk level is going to be 1 to 2%. Okay, I'm going to start off with 1%, right? I'll probably try to be a little aggressive and try to risk 2% of the account, but no more than that. I'm not going to risk 3%, 5%, 6%. Those days are gone for me. Now I have to reduce the risk down to 1 to 2% and grow it over time. Okay, grow the account over time. And I'm talking daily evaluations, weekly evaluations, monthly evaluations. Okay. I don't know if you guys were watching my previous videos where I talk about having 3 pillars, focusing on funding 3 pillars, or you can call them 3 different accounts. I have 2 right now. right, that I've passed, 2 challenges that I've passed. So my first 2 pillars are not going to be filled with the funds that I make with this account. Okay. When I talk about being your own bank, now you can manage your own money. When you start withdrawing when you put a withdrawal request and you receive that money, you fund the first pillar or the first account. The first account is to, number 1, buy you more challenges, right? That's important. You want to reinvest back into buying more challenges. I'm managing about $50,000 in funds right now with passing these 2 challenges. $25,000 per funded account. So the first pillar or the first account, I'm trading that account, growing that account. I will be requesting withdrawals out of that account to fund the first pillar. The first pillar, use that money to buy more challenges. Okay. The second pillar or the second account is to, let me replay that. The first pillar is to reinvest it, buy more challenges. Second pillar is to make enough money with withdrawals, right? When you request a withdrawal, make enough money to pay off your household bills. Okay, that way you're no longer using your work income to pay your bills. Your trading income now pays your bills. So you're gonna list what your bills are, right? Your electric bill, your cell phone bill, your rent or mortgage, your car note, your credit card bills, school fees for the kids, tuition, whatever your bills are, your household bills, you list them all out. You add it all up because you already know they're the same amount usually every month. Cable bill, things of that nature. You list them all out, you add it all up and say, okay, I need to make this amount per month. Okay, once I make this amount per month for my funding challenge, I'll request a withdrawal. Let's say round number, $2,000 is your household bills. You take that $2,000, you now pay your bills with that $2,000. Boom. You're not using your household, you're not using your work income now to pay your household bills. Your funding activity, your money you withdraw from your funded account pays your bills. Okay. Then number 3, the third pillar or the third account is for lifestyle. It's for quiet luxury. It's for the exotic trips. It's for, visiting family members, using that money to, live a better lifestyle, to change your zip code. If you want to live in a better neighborhood, grow that account, withdraw the funds, put it in an account for future benefit, right? Future you want to change your wardrobe, grow your account, request withdrawal, take that money, go buy some new clothes, go buy new shoes, go buy your exotic car. If you want to upgrade your car, go buy that car. So, but again, it all stems with money management. Okay. You're not going to be risking 3, 5, 6% anymore. You're risking only 1 to 2%, and you're growing that over time. It may take 6 months. It may take a year, but you want to make sure you maintain the funded accounts, that you don't lose them. Okay. And this company allows you to do copy trading. So eventually I'll do a video on how to connect all the accounts together, and you trade one account and it mimics the trade on all the accounts you may have. So therefore, if you made $1,000 in one account and you have 3 accounts, you made $3,000 for the day. And that's a strategy. Stay tuned for that. It's going to be phenomenal, because I've been watching a couple of YouTube traders, YouTube video, of traders who are trading 10 accounts with a copy trader. And then if one account grew, $1,000, they just earned $10,000 for the week. I'm like, what? And that's when it really gets serious, right? So that's going to come. That's going to come over time, but you start small and you work your way up. Okay. And the other thing I want to mention, I did make a profit for one of my an affiliate bonus, right? We received a an email that I just got paid out on one of my affiliate companies that I'm promoting. I actually got a payout, and I'm gonna make a video of taking that payout, that I just got, the referral bonus, and funding it and putting it into a live account. Okay, and then I'm gonna trade that money, being my own bank, right? Trade that money and 10x it to the point where now it's not only going to be helping me fund the 3 accounts that I want, the 3 pillars, I can make it a 4th pillar, and then a 5th, and then a 6th. So it's all about creating multiple buckets while sharing and expanding and being part of multiple streams of income. Because if you got like 8 streams of income coming in through my affiliate programs that I've been sharing with you guys, you can go to the YouTube channel to watch those videos. If you set up 1 or 2 of the affiliate programs and you start earning commissions, or start earning affiliate bonuses with those affiliate programs, you can now use that money to fund your lifestyle. Okay, to 10x it, to grow it, to open up a live account. Because once you build the skill set, there's no reason why you can't 10x that money. Okay, I mean, again, there's no guarantee of income. Your income's depending on your worth ethic and your time and effort you build towards, studying and practicing and things of that nature. But once you obtain the skill set, no one could tell you anything. You could write your own paycheck, right? So the goal is to not continue to, promote the affiliate business opportunities online. And as you start earning referral bonuses and commissions from those affiliate programs, you start funding your different pools. You start funding your different pillars. You start creating 1, 2, 3 different accounts to, 10x, or grow it, make more money out of it by your trading skills. So hopefully that makes sense. I was tripping up on my words, but that's the strategy, the long-term strategy. So I'll probably make another video on that, where I take that commission, that bonus that I received from that affiliate program, and show you, that I'll open up a live account, fund the live account with that profit, and then grow that account, and probably do it live, record the whole thing on my YouTube channel. I'll record it and put it on my YouTube channel, so that way you guys could follow in my footsteps, and it'll be a whole tutorial thing that you could watch as well. But that's how you do it. Use other people's money, because somebody else purchased a product. I get a referral bonus because of that. So that's somebody's money, right? And then the affiliate company bonus me my portion, which is pretty cool. So that money now, it's free money. I mean, it didn't take me that much time to actually promote, because like I teach putting everything on autopilot. And once you put on autopilot and you start receiving these, referral bonuses and commissions, sometimes while you sleep, you can start use that money to fund the dream. And again, it all starts with the dream. All right. So with that being said, I want to thank you guys for pretty much watching and hearing me share the vision with you guys, because it's over time it grows. Well, you got to water it. You got to practice. You got to back test. You got to believe in yourself. You got to do what it takes. It's going to be sleepless nights, but hey, it's all worth it at the end. Because you can't stop a man or woman with a plan. Just write it down on paper and set sail towards the land of abundance, prosperity, things of that nature. So thanks for listening. Subscribe to the channel, hit the bell button if you like what you heard, and share it. Share with your colleagues, your friends, and say, hey, he makes sense. Let's do what he's doing. All right. So this concludes the Forex Bootcamp training for this week. I look forward to sharing some more with you guys next week. So stay tuned for that. This is Wellness Mentor, over and out. Have a great week, everyone. Bye-bye.